What's up, Empire Builders? Welcome to another video. In this video, we're going to talk a little bit about what's going on with this global recession. This is a topic that I want to spend more time talking about because not only is it quickly becoming the most crowded trade, but there are implications with the strength of the indicator itself and the overall consensus and how many people are talking about it and the noise of it. And then I'm going to share some other data points with you too. Okay, so let's go through today's email. If you missed it, you can check it out. The link is underneath the video. It's free. You give your email address, or you don't even have to do that, but it'd be hard for you to check up on this every single day without giving your email. If you give your email, just sends to your inbox every day. And there's no bullshit. I don't think I've sent a single promotional email yet. Now, I put a PS, and that promotes some of our premium offers, but the entire emails themselves are all meat, okay? So, a few things. First off, it's something that I want to point out, which is a character trait, which is essentially that things are only true when people want them to be true, okay? Things are only true when people want them, when they're convenient for people and when they fit a bias and when they fit a pattern of behavior that they like. And when it doesn't, well, not so much, right? They don't care about it that much. So the theme of the email this morning was global recession marches on. And there's all this data coming out about these inversions, and there's all these experts talking about it, but are they taking the trade? Are they taking the trade? That is what I was talking about this morning. Let's go through it. Okay, so good size email, as you can see. And there's a lot of data that I left out. I teased at the fact maybe I'll do a second email today, but I don't actually ever do that. And it's because I don't want to overflow the inbox, okay? But here we go. So we've got some interesting things coming out today. In the last 24 hours, we've got Powell orders media blackout for Fed staff. So basically, the Fed and the White House administration is at the worst relationship they've probably ever been in. Now, could have been worse before, but we didn't have social media. And right now we have social media. So people are really, really acutely aware of what's going on. Now, at first breath, people think this is a bad thing, and it once again falls back on blame everything on the president. This happened when Obama was in office. This happens when Trump is in office. So everything is Trump's fault. Understand that. Okay, the Federal Reserve is not your friend. The Federal Reserve does not represent America. The Federal Reserve is not part of the government. The Federal Reserve is not the good guys. The Federal Reserve is a cartel of private families who offer money at cheap rates, paper at cheap rates, and get everyone hooked on the worst drug ever invented called fiat currency. Let that sink in. The Fed is not your fucking friend. The Fed is not part of the government. They're not the good guys. If they are at war with the White House, you should be fucking thankful. You should be thankful that there's a president who's got the balls to stand up to the cartels that have been running the entire world since they invented it in 1913. So the Fed is not the good guys. And I don't know how people still miss this fact. Like, the people on this channel don't, because you guys are aware. But if drifters happen to come along, now you know, all right, that you shouldn't care if the Fed gets along with the White House. And it should be telling on whose side the president or the administration is, what side they're on, based on how friendly they are with the Fed. Okay, we've had presidents in the past that just played chummy for no other reason than to play nice. Okay, and maybe this stuff is getting out now. Maybe social media is changed. Because between Obama and now, there has been a lot of big changes in social media. But nevertheless, the Fed is not the good guys. So who cares if Powell calls for a blackout? It's because there was already a recession started, and people don't get this. 9/11 was the recession. Okay. And I mean, I could even argue that the recession was the 2009 financial crisis and it never stopped. And that was the start of usually a much longer cycle. And we were about to enter into the worst part of the cycle. It was supposed to already have happened, I think. That's my assumption anyways. And this isn't political at all. But I think that, based on the families that make the rules. They had running candidates, and I don't think Trump was supposed to win. And I think their idea was to be at war with China or Russia or both at this point, and that would have been the start and really the slippery slope into this Great Recession. They happen every 70 years. Okay, so I think that what's happening now is there's a concerted effort to stop that. I mean, you gotta really take a step back and look at this for a second. The bickering and the arguing going back and forth between the president and Powell, maybe there's something more there, right? Don't be so quick to excuse that. And again, because that fits the bias of, well, I don't like Trump or I do like Trump. Here's my opinion on it. We got to look at the data for data's sake. Okay, anyways, let's get into it. So we've got Carl, we've got Sven, and we've got Jorn. I think that's how you pronounce that. You guys know I'm notoriously bad at pronouncing things, so it's okay. But here is the consensus right now. Everything looks oversold. Everything looks overbought. And that can't possibly continue, can it? That line of thought is one of the biggest mistakes investors make. And armchair analysts that don't actually have skin in the game. Because the market can continue at irrational, illogical, obnoxious behavior for as long as it fucking wants to. And there's not a single thing you can do about it because you're not a whale. If you're a whale, well, then you're laughing right now, okay? But if you are a solo investor, even if you run a fund, unless that's a big-ass fund, you really don't move markets at all. You are a minnow. You're a small fish, and that's okay. So the whole idea that because markets are overbought, they must correct. Because we're hitting all-time highs on the S&P, we must come down. None of that makes logical sense. Because we are dealing with irrational behavior. Markets are irrational. They are built on people's feelings. When I look at a chart, what that is people's feelings put into candles. That's all that is. People are price. Price is people. Okay? So, this I bring up in the very beginning here, what this reminds me of is Bitcoin. We have somebody like Peter Schiff, and I give this guy a hard time. I really don't care either way. I think he's definitely making himself more popular and more relevant by making fun of Bitcoin. There's somebody that compiled all the tweets that he has now made about Bitcoin, and there's more tweets he's made about Bitcoin than gold, and he has now tweeted thousands of times about Bitcoin since 2013. But if you were to have listened to this guy, here's my issue with him, if there is one at all, is that he's an idiot. And if you were to have been listening to him since 2013, you would have missed out on the biggest opportunity, which is to just buy and hold Bitcoin. And you would have sold it already. You would have sold it at the top. Even if you didn't sell it at the top, well, you had 3 opportunities so far to sell it at $13,000. So, I mean, $4,000 loss after accumulating it in the hundreds of dollars, not too bad of a gig. Not too bad of a gig at all. But everyone who is a loyal Pete subscriber would have never even bought it. That's my issue with armchair analysts. And if he thought it was going to zero, if he thought it was complete and utter shit, where is his short position? Where is his short position? He doesn't have one because he's not actually in the game. You see? So why are you listening to these fucking people? Why are you listening to them? Okay. Next. For the 210 inversions, for the 10 2-year over 10-year inversions back to 1956, the S&P topped out approximately 3 months, out within approximately 3 months of the inversion 6 times. These are the dates. The S&P 500 took 11 to 22 months to peak after the other 4 inversions. So, what is this actually saying? This is saying that we're actually looking for a all-time high, a new all-time high, a market peak in either 2.5 months from now, or somewhere between 9 and 22 months from now. 10 and a half to 22 months from now. And this coincides with other data that I shared with you last week. So everyone's buying then, right? That's what this means? So everyone's buying positions right now, right? No, they aren't. Look around. Everyone's sitting on the sidelines. During Obama's office, S&P rose 140%. What was everyone concerned with? Talking about the fact that he was the first black president. Completely distracted from what the fuck actually matters. Do you want to make money or do you want to talk about race and gender? Get the fuck out of here. What's going to feed your family tomorrow? You see? This is the game. This is the game that nobody's seeing. How come there's so few people talking about this? Why is my feed filled up with this? Sven, I like him. Northman Trader. We've never faced a recession with so much debt and so little Fed ammunition available. And with negative rates still in effect in many places, there's no playbook for this. Historical data will be of little use. Now, again, coincidentally, both these guys sell premium services. I'm not saying that to dog them. I do too. The point is, so where's your position? Where's your positions? It's very easy to talk about doom and gloom in the market and sell fear to sell subscriptions. It's very hard to have the balls to take positions. Because the issue is, especially if you're public, which these guys might have tons of positions that I could be completely wrong. And if that's the case, cool. Then I'm talking about the other people who are armchair warriors, okay? But it's very hard to take out positions and hold positions when you share them publicly. Because everyone comes for you. Okay, on BitMEX and crypto, they try to stop loss hunt you, and get you liquidated. They tell you about how you're a fucking idiot 20 times till the weekend. Price goes up $100, you're an idiot when you're short. Price goes down $200, you're an idiot when you're long. And all day long, it's because those are the people who are too scared to actually be in the market, so they just sit on the sidelines talking shit. And how often is that? I talk about that so much. I mean, go back on this channel. How many times have I talked about people sitting on the sidelines of life, watching a game? It's like I talk about this stuff over and over and over again. I don't know. Sometimes I just feel like nobody's fucking listening. So here's what I got to say about this tweet. He's right. Now, enter in the thing that maybe he's not paying attention to, which I've covered extensively. Oh, e-money. E-money will allow negative interest rates. They can go as negative as they want. And all the meanwhile, it is a built-in bail-in, meaning they are stealing your money, and you don't even know it. All they got to do is change the peg. That's all they got to do. Okay, so maybe it's a 95 to 100. You just lost $5 per dollar. Maybe it's a 93. Maybe it's a 97. Maybe it drops as low as 70%. I mean, guys like this will be able to get online all day long and talk shit about it, but it's still stealing money. And it's actually a way out of this whole situation. And they've been planning this since at least 2017, we know of. What if Bitcoin was the test, right? What if they did make Bitcoin? I'm not denying that. What if that was a blackout project from who's the organization? I can't remember now. It's been a while since I've said this soundbite. But what if it was the agencies that made this? You know, whether they're rogue or not. And this was a big test. It's gone really well so far. 10 years. It's gone really well. Next year is going to be a halving. First time ever, it'll be less inflation rate than the fiat currency. Okay, surprise, surprise. The total amount of negative yielding debt has toppled 16 trillion. Well, today it rolled over 17 trillion. So surprise, surprise. And that's because there's no more debt ceiling. They've removed it. So full rockets, full steam ahead. And this is what it looks like in a full-blown expansion, 100% expansion-based model. There's no time for stagnant money. Money cannot sit around because its purchasing power is dissolving by the instant. That's what's going to continue to happen. So two things are going to happen out of this. Okay, let's just go ahead and give you the teaser now. It's going to completely all fall apart, or it's going to continue. Right? Seems pretty logical that those would be the two outcomes. And if it continues, your money, you'll need to spend it so fucking fast that you won't save it on anything. Well, the average person won't. People who realize that you need to take this paper that doesn't actually represent value, it is representing a value transfer, not the value itself. Don't fall in love with the money, because that's not the real thing. The real thing is the assets. What do you go and get with that? And rich people understand that, and they'll get richer during this whole situation. Whether the shit falls off tomorrow or it continues to go up, they will profit because they realize that it's about exchanging the value mechanism for the value itself and the asset itself. And that is the real estate. That is the gold. That is the cash flow business. That is the property. That is the, brand new startup that's going to make rockets to take you to the moon. They get that, okay? All right, so For the first time ever, more than 28% of outstanding debt tracked by Bloomberg Barclays Global Aggregate Index comes with a yield percent below 0. And here is that blown up for you. Okay. Yeah, looking pretty parabolic there, ain't it? Here's what your good old debt ceiling looks like. According to wolfstreet.com. That's a good site. I pull a lot of data from there, actually. So you can add that to your list if you haven't already. wolfstreet.com. Okay. All right. What's the other piece of data I wanted to show you? Let's get into it. Where are we? This guy. Here is your yield rates. Negative in most places, except the United States. Now, could this be why Trump is calling for a immediate 100-point base cut, which he just tweeted about today, like a couple hours ago? Again, remember the whole dynamic here. Trump's an idiot, and everyone else is smarter than him. Get him out of office, impeach him, and get things back to normal. You notice how right now the thing that's going on is it's a war of comfort versus change. If you want to simplify everything going on right now, it is a war from people who don't want to change. They can't handle it. So much so they got to go and dye their hair pink and blue and get all kinds of holes put in their body and tattoos everywhere, fucking losing their minds. And then people who can handle change. People who are used to, maybe, or have trained themselves to deal with high pressure, high stress situations, or just even change itself. Change doesn't have to be stressful. But when you resist it and you fight it at every corner, it will wear you out. You will get fat, you will get tired, you will get sick, and your body will get filled with disease and illness. Is that worth it? Or maybe just be happy. How do you be happy? Well, just look at the fucking data. And what is the data telling me? And then how about we make decisions off of that, not off of my emotions and how I feel about fucking Trump's haircut today. Right? So anyways, that's the data. That's what I wanted to share with you. There are some other things. I'm going to save that exclusively for our Empire Intelligence Alerts members. We're going to jump on a, emergency webinar tomorrow. It's not an emergency webinar, but it's basically I want to update them on this indicator and give them much deeper details than what I just gave you. But there you go. That is the start of it. That is the start of what you need to be paying attention to. You need to be able to look at what these guys are saying and make educated decisions based on that. Look at what we just covered. What we just covered could be the framework for you completely changing your life, for you completely changing your financial situation, by just looking the opposite way of what everyone else is doing right now. Everyone, I can assure you, they are on the sidelines right now, waiting for the big one, waiting for the fucking bottom to fall out, but they're not even paying attention to the data that they're even touting and spewing out, and resharing and liking and retweeting. Because if they were paying attention to it, they would be buyers in this market, and they're not. They're not. Make sense? Cool. That's all I got for you. All the links under this video. There's just 3, okay? You can subscribe for free. You can pay us some money. What's the third one? Subscribe to the channel, I think. And maybe there's a 4th one, which is the Substack email, okay? Which is what I just went through with you now. If you like this stuff, then go ahead and click the like button. It will help this video go out into the YouTube algorithms. Hopefully we get some more traction on this. I think this stuff is insanely important. Maybe if you agree, then help us share it. Share it with a friend. Share it on social media. You know the drill. Next, if you've come here and you saw this on somebody's wall, well, welcome. This is what we talk about. This is what we do. Macroeconomy, personal finance. And give us a subscribe. Hit the bell notification. If you got something to say, comment below. Be on the lookout. More videos dropping soon. Bye.